Hey guys, Novice Unicorn here. I'm a total novice. I know nothing about stock trading. I know nothing about equities. You probably shouldn't even listen to me, but I want to put together this video, and it is based on a question I received repeatedly about. They're always worded this way: why is this stock dropping like this? Why am I getting blindsided? And especially because great news has come out. And it's because those persons have not learned yet the system. And I'm specifically speaking about biopharmaceuticals, biotech, um, cash starved companies, startups. Um, we're talking about volatile companies that have generally good products. They generally have some steam going behind them. They have a good thing going for them, but there's a system. It is in your eyes, you're looking at a chart. In their eyes, they're looking at their company. And so you have to look at it from a company's perspective, not from a chart or from a news perspective. Some great news came out and it's time to buy. It comes down to you have to think as the company, not as a trader. And particularly in biopharmaceuticals, which is my biospec is like my biggest area. I play it a lot. Um, but this is the system, and it took me a while. It took me, I took some lumps on the head before I figured this out, because I don't really know a whole lot of people. I mean, it's not quite out there, and that's why I'm just putting it out there as well. In the tech industry, biotech or biopharmaceutical industries, the companies, in order to stay alive, they have to raise capital. They have to raise capital. They're not 3M or they're not Walmart. You know what I mean? They don't have people coming in and buying their goods, or if they are, it's on a very limited, scale, and compared to the capital outflow. So their capital inflow has to come from someplace because they don't have somebody buying their product yet. Capital inflow has to come from stock investors. Originally, it comes from venture capitalists, the big guys that buy stock at 1 cent that goes to $10, but they take huge risk doing that. But they have to get their money from some place. The stock just doesn't go up and the company's great. Like, the company has to survive, and they get their money from investors. That's the nature, and there's no better area than to understand that than in bio, pharma, tech, and speculative stocks in that area. Okay, and I'm going to give you some examples. Like, everybody gets cold cocked by this. I don't know how many people I've seen. What happened? Like, it's coming. No, it's coming. It's coming. Just pretend. It's there. Even if the stock doesn't look like it's coming, it's there. The way to tell is what their cash flow is or what their capital on hand is, and you will always see that in their earnings they don't show projections on they don't show like guidance for the next quarter of being like, we're going to make $10 million or we're going to make $50 million or whatever, like you would see on a larger cap or mid cap stock. They would say, well, we have $10 million cash on hand, or we have $50 million cash on hand, and it's going to survive us through 2018 or 2019 or whatever, or the end of 2017. That's when you know it's coming. So I'm only putting that. I don't know anything. I do not know anything, but all I'm saying is I see some people that struggle with this, and it makes me sad because it's the way the system works. It has nothing to do with the company or whatever. It's the way it works. They have to make money somehow, and they make it off of investors. Unfortunately, they make a lot of money off of retail investors that don't realize it because they buy not knowing that the axe is coming. And I'm going to present just a few examples. And if you go to here, this is just a general information area. Secondary price, secondary price offerings. Um, and you go down through this list and look for pharmaceuticals. Here's pharmaceuticals. I don't know who these people are. I'm going to tell you to play them. I don't know who they are. All I'm saying is you can go through here. So you think this is therapeutic, blah blah, neonode. you go through here and you can see recent offering options. Okay, now I'm not going to go back through and all those because I don't play that. This is not how I pick stocks. I don't look for this stuff to pick stocks. I'm just saying the resources here if you need it. But that being said, I'm going to show you a couple different stocks. Okay, a really super hot one right now is, I don't know how you pronounce it, Arenia, whatever you want to say it. I call it off. Anyways, AUPH. These words, you only need four letters. This thing spiked super hard, and I was not in it. It's one that I didn't do my research. I didn't know anything about it. I did some serious research after the little move here. Did some looking. Popped super hard, and I watched this pop happen. I didn't play it because I know. Well, I didn't play it because I had not done enough to know. So I just stayed out of it. And earnings was coming out. That was a big no. I do not buy something right before earnings. I just don't. Like, especially when you don't know what's going on. Like no, that's like go play the ponies, you know. But the thing is though is after doing just a tad bit of research, I knew what was coming. It's obvious it's coming. It's there. You just go on FinViz or on Morningstar or wherever. Even TradingView, you can pull up their whoops, not bad. You can pull up their current statistics. So, what's their what's their value, what do they got, cash flow, all this kind of stuff. It's obvious that the company, because it's a pharmaceutical company, they are cash starved. They spend all their money on research, and they have no sales, or limited, or contracts. A lot of times they get contracts. Blah blah blah. Oh, I got a really good one here. I'll actually add it here. We're not going to go there. But the point being is that anytime you see a pharmaceutical stock pop, biotechnical, I'm not talking about Amgen or, Pfizer or some massive like blue chip. I'm talking about spec biopharm. Anytime you see this happen, it's coming. It's coming. You know it. You can bet on it, which I did. But anytime you see something move this hard, especially after good news, and they had good news, especially after good news, on this day, overnight, they went to their, the banking industry, and found some investors and saw if they could drum up some investors, and sure enough, they came up with a, 222 million shares, $150 million stock offering, 22 million shares overnight. Okay, priced at $675 to $625. Okay, in the range from basically the bottom of this little area right here to the purple line. I put it at $675 because I want to know the top. I want to know the maximum amount that an institution will pay for a stock, and at this point, it's $675. Maybe some other stuff up here, but whatever. The real players that were offered the stock chose to pay no more than $675. And everybody's crying, it's worth so much more. The real players, they got offered, how much will you pay for this stock? $675 is the most I'll pay. And those are the real players. Listen to the real players. So, I'm not saying you can't go higher, but you got to listen to the real players. Yeah, especially when you got a small bankroll. But there's your offering overnight. Oh, this thing is friggin' great. How many people got cold cock on this now? The 25% loss, just bam, right in the face. And it was coming, and it was obvious it was coming because the company is cash starved. Even with good news, it's cash starved. It needs money. It has to have a capital infusion. That's how pharmaceuticals work. Another good one. This is a more recent one. Somebody's like, why? This is actually the one that prompted the question. Why is this thing going down? I mean, I've been watching this thing for a long time. Okay. And again, I don't buy something into earnings even if it pops super hard. And this is actually, you can see it, fairly smart. Unless you bought down here, you're like, great, that's great. But to buy into the anticipation that earnings will be good, whatever. The point being here is that the stock popped off of some good news. I think they won. They won a right here. They won a court ruling against Berkeley. Great news, great news. But you can't buy that because what happens when the stock price goes up? When the stock price goes up, they're going to say, hey, we have great news, and they're going to farm this thing out or shop this thing to everybody they can because they need capital, because it's a speculative pharmaceutical company that doesn't make any money, really. I mean, comparatively speaking, what they need to make. They need money for research. This thing tanks off really hard. It tanks off even harder. Oh man, I knew this thing was coming. I almost bought this on the trend line, but I said, you know what? We'll just wait. I need a clear sign of reversal, and it's not there. So a lot of people got taken in this. Some people made money. Some of you made some good money if you bought it down here, but I don't even know where your indication was because it came to 200 DMA, whatever. But the point being is, forget the whole bounce and all that mess. The point being is that you had a fairly mild trend, and then you got a huge spike, and of course a huge sell-off. But the company actually messed up because they should have done the offering back here, but because you can get more out of it. But the point being is that when the price is no more, is in this range. Wow, that's a really scribbly line. When the price is in this range, and they're going to offer a share price, they're going to offer a share offering. They want the most for their money, and they figure like, hey, people are willing to pay this much up here. We can probably do an offering down here, which drives the price way below that in most cases. So that's edit. I do really like this. I'm not trying to trash the stock. I do like the stock. In certain instances, but here's another one. Let's go to eBay. This is probably the classic. This one I watched so many people get their heads taken off on this one. EBIO. I mean, just like chopped off. Well, no, it's SPHS. Both of these actually happened at the same time. Heads taken off. And this is why I wanted to point. We don't even need the moving averages. Let's just blow this up. Or oscillators, not moving averages, whatever. I had been watching this stock back here, and when this pop happened, I was very mad because I was really going to buy this thing, and because I read their preclinical data. It popped. It came back in. I said, you know what? I can't buy it because it popped. And when it pops, that means a share offering might be happening. It didn't happen. Then continues to this was like. The fanboy club on this thing was, looked like a Britney Spears video or something. But this thing moves so hard. I mean, crazy hard. Sorry for whoever bought it at 851, but so hard this thing moved, and it's obvious with nothing. I mean, then I don't even think they were in phase 2A, or they maybe were starting it. I don't know, but. The point being is, anytime you see a stock that has been flatlined for so long, they probably even did an offering back here. I don't even know, but they need money. The share price is up here. The share price is up here. They offer, boom. They offered at 390 something. I can't remember. It was 399. The most ridiculous thing on this is that I called that there was going to be a share offering at 399 back here before they even did it. I knew it was going to happen. I was within. I think it was $4. I called $3.99 or $4. Can't remember. I got to pull back. But anyways, I was within a couple cents of their offering. Because it's obvious when the stock moves this hard, it's free cash for them. They can say, "Hey, look, we got all these people willing to pay $5 a share. We're going to give it to you for $4." And then, of course, collapse. It's flatlined again. It's okay. The stock's really awesome. Don't get me wrong. I actually said to buy this thing. I actually said this was the number one gainer on yesterday which it was not a number one gainer, but dang, that's some serious volume on a on a pretty good candle. Not a great candle, a good candle. But I said I said this was the number one gainer of the day. I was only 12%, but whatever. Um, it's not dead. But the point being is that when you see huge moves in speculative pharma, this changes. This changes once they've gotten FDA approval. Once they got FDA approval, what's going to happen is you're going to get a major stock offering. And what's a really good example of ICP? Another stock that I followed in here. I don't know exactly what the date is on this one. This chart looks terrible, but this thing's going to be probably a monster at some point. Somewhere in here, they got FDA approval. I think the FDA approval date was somewhere back here. I can't remember where I played it at. I think it was right here or right here. There's big pop-ups. It was somewhere around 180 is what I went to. Yeah, right here. No, right here. It doesn't matter. One of those big moves up was right their FDA approval. It's probably right here. Anyways, doesn't matter. The point being is that they did a stock offering of $400 million. I can't even go back. It was to raise $400 million or something like that to fund their drug that got FDA approved. Thank you. Easy update. And this is a fairly large company. They have fairly sizable capital, but they still needed a lot of money to push the new drug that they had come out with. And when they did that, I'm going to guess it was somewhere right around here. Crash. And actually, this was actually crashed on earnings a little bit too because they haven't the drug hasn't had a strong enough uptake yet. But the point being is that even this is a very large stock, and they have a fairly good drug that's worth a fairly decent amount of money, but they don't have a crap load of money, and they needed capital, so they got a capital raise. And capital raises always happen after good things. Capital raises always happen after good things. So they're not immediately, but it's going to come within 2 to 3 weeks. Just know it. It's just the way it works. Yeah, RNA. EBIO. Same deal. Huge spike. I mean, the fanboy base here was massive. It was just ridiculous. I mean, the stock went from 28 cents to, it's ridiculous. I mean, just 1,500% move. Just crazy. That was only after dropping, 78%. Ouch. But crazy. Still on my permanent all-time watch list. But somewhere in this move here, there was an offering. I don't know where it was, and I didn't track it down. The point being is that when a huge move comes off of good news, be prepared for an offering. If you got stuck in edit, I mean, this is kind of strange because that bounced off the offering, which is sometimes people say, well, the offering, this is the price they offer. I don't even actually know what their offering price was here, so I didn't look it up. I do know what the offering price was here. People are like, this thing's amazing, buy it up. A lot of people did buy it up. There's a lot of volume there. Shrink it out. I mean, there's a lot of volume. Actually, I don't like it looking that way. There's a considerable amount of volume coming through these days after the offering, but you notice that volume dip. That's like, hey, there's an offering, it's gonna go through the roof, and that, while the price stays flat. You hit an update here, you have the 20 DMA here, 50 here. I see this. This is coming down to find a support level. This is coming down to find a support level. I guess since the offering was at this price, it's probably not going to. That's why I haven't bought it yet. Everybody's like, why don't you buy it? Why don't you buy it? Well, because I ain't dumb. But dang, that is a brutal. If you know candlesticks, that's rough. But the point being is that anytime you see a strong move, if you're gonna play a pharmaceutical company, you need to know how much they're valued at, what kind of capital they have on hand. how long, where they are in the research phases. Did they have a year of capital and they got 2 years before they release phase two's data or phase three data? They're going to capital raise the second the stock goes up. So find that stuff out. You have to, if you're going to play speculative biotech or pharma, you have to know that they need capital infusion. And in this case, this is like the reason that this stock did not fall off was because this capital raise was actually done really well. Its capital raise was done all outside of the market by large institutions after hours. Which means there's a lot of institutions that wanted to buy this thing or that saw their data and said, "Hey, let's buy this thing." It wasn't on the open market, so a lot of institutions, they pretty much shop it all the time. Usually, an overnight capital raise of $100 million or whatever, that's a pretty $150 million. That's a really large capital raise. $150 million will do you a lot of years of research. So, I mean, most research burns at, I don't know what the number is, but if you have $50 million, most research that'll do you 2 years. So $150 million capital raise overnight, that's a lot of money. I mean, that's a pretty big bet. That's why this thing has not tanked off as harder than it has. But the point being, look for the capital raise. If the stock's gone up, you're chasing something that's really good. If they don't have a lot of money, and there's a lot of places you can go to look for that. You can go to Finviz. I mean, that's probably not the best place to go, but you can look at their last ER. Go to Edgar, SEC's Edgar. Look up their last ER, and they will tell you how much cash they have on hand. Okay, if they don't have a lot of cash on hand and the stock spikes, get ready for the axe. Okay, but you have to learn. You have to know this, that a strong move in pharmaceutical companies always happen on phase 1, preclinical, phase 2A, phase 2B, phase 3, an NDA application, first dosing of a patient in phase 3 or 2 or whatever, a contract, whatever. I guess a good one, like this is actually a really good. This is another good one where the stock, I was watching, the stock spiked super hard off of news that Nestle gave them $100 million. Anytime a cash infusion comes in, it validates the research. It keeps these companies are drowning a dying fish on the side of the beach, and cash infusion is splashing water on them. It's keeping them alive for X amount of years or months. But I don't actually know. I can't remember if they did a secondary offering because they got $100 million infusion or something like that from Nestle. They don't really need to do cash infusion. But you need to know that anytime the stock pops, edit, pop, AUP8, pop, they're going to raise capital. The stock's going to get axed. So you got to know it's coming. You can't look at that. You'd be like, wow, this thing's going through the roof. It's awesome. The axe is coming if they don't have money. That's just one little tidbit I kind of know. I mean, it doesn't work for everything, but that's just what I've noticed. So I could be totally wrong. So take it with a grain of salt. Good luck, guys, in all your speculative plays, and just know the axe is coming.